What sets us apart is we're the only firm that I know of that can take data, unstructured data, raw unstructured data, and produce alpha generating signals that are empirically proven to beat the market. We've got multiple papers published on this capability from Harvard Business School, MIT Sloan, Journal of Financial Economics. Some of the most prestigious institutions of the world have vetted and validated what we've done. And the reason they can do that is because everything is auditable back to the source.
My guest today is David. David was a Wall Street insider who saw problems in the system and decided to actually do something about it. Now he's the CEO and founder of the company New Constructs. David, welcome to the podcast, and thanks for joining.
It is great to be here, Nabil.
So why don't you introduce yourself, the company, tell us a little bit about what you do.
Sure, yeah. I got my start in finance many years ago. I was an executive compensation consultant, and I got into that because I was intrigued by this idea of going to boards of directors and saying, look, whatever you do, don't pay your executives based on accounting earnings because you can grow accounting earnings while running the business into the ground. That job opened my eyes to the footnotes and how to really bring all of the financial data available on companies to bear in understanding profitability and how important it was not to overlook those footnotes. And then my next job was with Credit Suisse, where they took this concept of building a better earnings model and scaled it globally across the entire equity research department before the tech bubble, with the idea of being able to go to their institutional investor clients and saying, hey, we've got a better model for measuring earnings. This is going to give you a better sense of the profitability of the business and a better sense of where the stock is going to go. And I ran that business for Credit Suisse for several years, and until it became sort of its own separate business line. And then I decided to become a regular research analyst and let the tech people scale what I'd built. That didn't really work out. Credit Suisse spent a bunch of money trying to do some other things. And when they failed to sort of make this idea work, I decided to start New Constructs. And ultimately what New Constructs is in today's language, and this language or this terminology wasn't around when we started back in 2003, but we're really effectively a small language model firm as opposed to large language model firms. And we power AI agents to pick stocks better than anything else that's ever been built for fundamental research.
So small language models, like you said, that's a very current term and very relevant in today's environment. Back when you first started New Constructs, it wasn't a term that anyone knew or had heard about, small language models or the concept of an LLM. How did you see kind of that gap in the marketplace to create something new? And I guess before the advent of small language models, how did you go about solving that?
Yeah, we didn't call it that at all. The term machine learning and AI, those things really weren't even around. The specific market niche I was filling at the time was to help institutional money managers build the kind of models that they wanted to build to understand profitability and valuation. Because we'd already entered the phase as the tech bubble had come and gone, where they were getting hundreds of emails a day and they were on conference calls all the time. And people didn't have time to read 200-page annual reports anymore. And that was my first and best customer, was the global head of research at Fidelity. And he said, literally, I want this on every desktop for every professional at Fidelity because, he saw it as a very valuable tool. And he knew, because he'd been a portfolio manager, people just don't have time to read these filings. 200 pages of material, it's not comic book material, right? It's tough. So it's like easily 8 hours per filing per company every quarter. That's just a lot of work. And it's even more work to put all that data into a model and to make sure it's apples to apples across all companies. So we really just built a technology in the beginning to make the data extraction better, faster, and cheaper. And that technology was at its core the combination of a digital version of the filing, a database, and a parsing tool to take the data from the filing and put it in the database. And that's really what we started with. And on top of that, there was logic to build models. And then from there, you have logic to create ratings and metrics and ratios. But really, the special sauce was this technology to pull data directly from filings with greater detail, accuracy, and speed.
Interesting. So if I think about it, really doesn't make sense for each investor to do their own reading 8 hours per company, looking at the footnotes, doing their own research. It makes a lot more sense for that to be centrally done. And then again, to your point, why does a human have to be doing that? Is there technology we can use to kind of advance and speed up that process? Because what we really want at the end of the day is that core data that helps us influence some of our investment decisions. And so having one company that does in establishing some sort of technology capability that can actually extract the useful parts is way more valuable than every single investor trying to do that on their own.
Yeah, you nailed it. And I remember when we were first marketing new constructs, some of the pushback we got was, "Isn't the government going to take you over?" And I agree that, like, I think every investor deserves the truth about profitability and valuation. I mean, that should be table stakes. Every day we just have that. Now, you may have different beliefs about the future of the business, and everyone should. That's what a market is for. But it shouldn't be that hard to get the truth. And I think it's hard on purpose because the people that have it have a distinct advantage over those that don't. And so I think a lot of the major players, constituents in the market, like it the way it is. But new constructs is a new construct for a reason. We want a world where people have access to the truth about profitability and valuation because we think it makes the markets more efficient, and more efficient markets creates higher standards of living, not just here, but around the world. And that's ultimately our mission.
It makes sense. So the head of Fidelity Trading was super interested, got it right away. Did it click like a light bulb for some of your other earliest clients? Or what was that process like, kind of digging around and explaining kind of a net new concept to people that might just be used to the existing filings and existing data they get that they're not willing or wanting to change?
It was for sure pretty two distinct personas. Some people got it right away. Most people were afraid of it. In fact, the Harvard Business School case study published on us back in 2018 quotes portfolio managers saying, "Yeah, the new constructs data is probably better than what I have right now, but as long as everyone else is using the same bad data, I'm okay with that." Other pieces of feedback besides, "Oh, the government's going to take you over," other pieces of feedback were, "Yeah, you're just going to take away my competitive advantage, David. Yeah, I don't really want to see you be successful, so I'm not going to be a client." And so, look, I think you look back at the history of the mutual fund industry. I mean, it's kind of one of the biggest rackets of all time, right? They get paid huge fees for bundling stocks. And I say that's all they do because they don't outperform. It's 75% of all mutual fund managers in any given year underperform their index. If you look at it over a 4-year period of time, less than 1% outperform. So they're not adding value, but they're extracting huge amounts of fees, which is why we have ETFs, et cetera. But when you think about that, that's sort of what the mutual fund industry has done in terms of performance. You may be a little less surprised to learn when I go and talk to the individual portfolio managers, they're not really interested in tools that are going to give them the truth and help them pick stocks better.
As long as they have the assets under management and they're getting their fees, it's not really the biggest deal. Yeah.
Bingo. And because the fees are enormous and the assets under management are enormous, huge. And so they get around, they get to sit around without having to do a lot of work and make a lot of money. It just flows in. That's the way it's been for many, many years, which again, why we have ETFs and why I think people are clamoring for alternatives. And I think we see a lot of self-directed trading because of that. Why am I paying fees to someone to bundle stocks? And now that, a lot of barriers to entry for individuals to do this on their own have gone away and they've taken charge.
To that point, I know you jokingly mentioned, oh, the government's going to take you over at some point. What type of shifts are you seeing, if anything, from a regulatory transparency standpoint? You mentioned some of the barriers to entry, even for individual investors, have gone away. What are you seeing in the marketplace, and how is that impacting how you're looking at growing new constructs?
Yeah, the regulators honestly have not been that interested in what we're doing. I spent time in DC talking to the SEC, Senate Banking Committee, Special Committee on Insurance and Investments, and variety of folks, FDIC, PCAOB. I did the rounds. Surprisingly, there was a lot of interest from sort of politicians, honestly, in what we were doing, at least initially. That's a separate story. But the SEC, they were quite defensive. And
Interesting.
I went into the meeting knowing, hey, listen, keep a low key, make this an enhancement tool, be as non-threatening as possible, because it's a pretty revolutionary technology. And a lot of what they spend their time doing is reviewing 10Ks and 10Qs. And so I basically said, look, hey, there's a lot of times that the data comes out and it's not right, and the income statements don't add up, the balance sheets don't balance, and these are not rounding errors. And I know you guys have a limited amount of staff and people and budget. What if there was a machine that could automatically scan these filings and highlight to you potential issues? So you could just focus on where things looked odd and not have to look at everything. And they got angry, like an angry like. And anyway, we ended up doing a bunch of dancing around and I'm like, listen, what's it going to take for you to become a customer? Like, we got a project for you. We want you to find all the instances in the filings where companies have special purpose vehicles, but they don't call it that. I said, okay. We came back with 200 instances of that. Never heard from them again.
I was going to say, it actually sounds like a legit use case would be value add there.
No, it was. It was. We figured out how to do it. They're alternative. It's alternative language. That's kind of what we're good at, is figuring out how to like get the meaning out of the filing, no matter what the words are. Anyway, that's the regulatory front. The bill. Congress was tougher. They were interested, but the challenge there was that you had to have a lobbyist to like be your proxy every day, or at least once a week, going and talking and giving the same pitch over and over. Well, it turns out that Goldman Sachs and Bank of America, they own all the lobbyists. So none of the lobbyists could work with me because they were conflicted out, because we might have research that wasn't necessarily positive on Bank of America and Goldman Sachs. And in particular, part of my report to the Senate Banking Committee was that if you looked in the footnotes, you could have seen an extraordinary rise in credit default swap liabilities in Bank of America's footnotes. And so then, yeah, we couldn't get a lobbyist.
I guess just taking a step back in general, in the age of AI, we're at a place where people are constantly getting bombarded with. We have these new LLMs that are going to ingest all the data that's out there on an investor call or report and do some of your stock picking for you, et cetera. One of the things that I've learned is that the AI is only good as the data. How do people trust these different tools that are out there? There's more and more coming up every day. What kind of sets you guys apart? How do you think about that?
What sets us apart is we're the only firm that I know of that can take data, unstructured data, raw unstructured data, and produce alpha generating signals that are empirically proven to beat the market. I don't know of anyone else that's done that. And we've got multiple papers published on this capability from Harvard Business School, MIT Sloan, the Journal of Economics, the Journal of Financial Economics, and Young. Some of the most prestigious institutions of the world have vetted and validated what we've done. And the reason they can do that is because everything is auditable back to the source. So people can verify, right? Trust but verify. You don't have to trust us. You can actually verify that the data is superior or where it comes from. I can even share my screen and show an example.
That'd be great. Yeah.
So you can see exactly what I'm talking about here. So this is an example of our website where you can just pick a ticker and get a model. We do ratings on stocks, ETFs, and mutual funds, credit ratings as well. But the real key here is like, so if you want to understand why we think Meta's core earnings, were above their reported earnings, here's where we look at the difference between core earnings and reported earnings. In 2022 and 23, we can actually go to the filings and say, okay, let me take a look here in 2023. What was going on? Income statement adjustments. Here we go, restructuring. So these were a bunch of restructuring charges that were included in personnel costs during the year. So you wouldn't see these items on the income statement because they were buried in another line item. So that meant that the expenses were overstated, because when you pull these unusual items out, you get to the truer earnings. Same thing in 2022, where we had additional impairment charges, restructuring charges that were buried here. You can see all these different restructuring charges here. And so that these unusual items or expenses we pull out to get to a more normal or recurring core earnings number that's effectively a superior number. And that's now traded live through a Bloomberg index. It's called the Core Earnings Leaders Total Return Index. There's also an ETF that's licensed this, but because I'm not an RIA, I can't really tell you the name. But I can talk about the underlying.
Find it on your own. Yeah,
that's right.
Google it.
I can talk about the underlying index, and here you can see the performance. I mean, it's versus the S&P over 5 years. It's beating it by 40%. Year to date, it's beating it by 7%, 700 basis points, 7.4. So, short term, And long term, you're seeing really strong outperformance. And that's why I say, we're the only firm that I know of that's got proven alpha in the data. And it's an interesting technology. I mean, this business school professor, Harvard Business School professor Charlie Wang, he's one of the leading minds in academia and in the world around using AI to build better investment tools, using technology. And he wrote this case study on us back in 2018, which you can see is all about disrupting fundamental analysis with robo-analysts. That's what we called the AI agent before the term AI agents were around. It was a robo-analyst as opposed to like a robo-advisor. But Charlie's been doing this work for a long time, and he's consistently proving that the large language models have significant blind spots and biases that lead to suboptimal results. And
Let's talk
so,
about that a little bit. So, with every new technology, there comes limitations and handoffs and trade-offs. What have you seen as far as what are the limits for some of these large language models, and why did you make the decision to invest further in kind of small language models?
yeah, I think the whole large language model thing is a fool's errand, a deep fake to suggest that there's a programmer or a computer model out there that can figure out the world. And they said, "Oh yeah, we're just going to feed it the internet." Okay, that's like feeding an athlete everything in the grocery store and expecting the athlete to do well, right? And so it just doesn't make any sense, right? There's no data set for the world, right? I mean, and so I think the small language model concept is really just this very simple and intuitive idea that, look, if you want to get a machine to do something that you can really trust it to do right, well, then you need to narrow your focus down to a domain that's small enough for human experts to curate it in a way that it can be delivered to a machine. So all of the rules and deterministic inputs are reliable enough to produce results that are as good as a human expert, right? You're going to give it a data set. You're going to say, you can ask it all these questions and they're right. And by the way, you can validate it. And I think in order to do that, we have to break the world down into small enough chunks that are digestible enough by the machine.
That's interesting.
That's the idea. Let's have a really completely clean data set and use that to drive a focused agent where we can say, we know for sure that this is going to give you the data here is rock solid. You saw my click-through feature. Like, you can go check where the adjustments come from in any filing, and you can know that it's right. And then at the end of the day, you saw, the index, like if that data is good enough when put together into an ontology that drives real alpha or outperformance, well, then you can trust that, it's an empirically proven to be effective ontology and data set. And that's what you want. You want AI to be based on things like that, not on the internet.
The meme trading forum on Reddit, which is also training data for an LLM.
Exactly. The sources of data, that's the real problem, is that they don't know how to discern. I think that's a problem in our country in general, right? There's a lack of the ability to discern whether it's the news or the food you eat, but even for the models, it's the data they take. And to your point in the beginning, models are only as good as the data you put into them. Garbage in, garbage out. We've heard this. I mean, I've heard it from the beginning of my career. Models are only as good as the data. And so if you're not careful and discerning about what data you put in the model, you have to be really worried about the results you're going to get out. And all we're doing at New Constructs is saying, look, stop for a second. Let's focus on data sets that are small enough that we can completely get our heads around. We can audit them, and we can put the data together and into an ontology that produces real insights, expert level insights. That's value. That's something you want to build an AI on.
So you did mention a partnership with Google Cloud. That's interesting. Can you tell us more about that?
Yeah, sure. We've been building an agent based on our data because Google Cloud, like Microsoft Azure or Oracle or Amazon, right? They've started to recognize that the puck is moving away from who can build the biggest data center to where do I get data sets that can actually endow my machine with enough subject matter expertise to produce human expert level type answers. How do we do that? Because that's what we need to do at the end of the day. It doesn't matter how big this data center is or how fast I can compute bad data or digest bad data. I need to have something really valuable in there. And so Google Cloud was one of the first firms we talked to about that. And they were on it right away. And they're really interested. And Google has always been interested in providing grounded results and insights. insights grounded in real data and not hallucinating. And so we've been working with them to build an agent for that for a second, if we want to take a
Hey,
look.
let's bring it up.
And so the cool thing about what we can do with Google, Google Cloud, is we can ask us questions like, show me the best tech stocks. Try that, like with another AI, and see what you're going to get. You're going to get some technical research. You're not going to get really much of anything that's fundamental. You might get like the best performing stocks. But with what we put together, you're getting an answer based on data that we know is superior and proven to outperform. So these are the stocks that get the best rating from new constructs, the very attractive rating. And by the way, the Bloomberg index, based on the very, very attractive stocks, also outperformed significantly. So we can do this compared to the S&P 500, and you can see year to date outperforms significantly over 5 years, outperforms by, nearly 80%. So the stock rating system is great. So when you actually ask us, show me the best healthcare stocks, you're going to get answers that are really the best. And you can do other searches like show me the most profitable healthcare stocks. And that'll give us an answer also. Because, and by the way, we've got multiple papers proving that our profitability metrics are the best in the business. So if you don't really care for our valuation, right? Because our ratings are both a function of quality of earnings and valuation. You say, you know what? I don't care about your valuation. I just want to know about your profits. System can show you that as well. Those are the most profitable. And, our core earnings
Interesting.
are one of our best metrics. You either compare core earnings and GAAP earnings for AAPL over the last 5 years. This will also give us an answer. You'll see. And one of the cool things too is that these guys have built in the ability to automatically download this stuff into a table or copy it straight into Excel, which is pretty cool. I
Wow.
know for a lot of our professional clients, they're going to want this stuff, that you can put straight into a table. And here you
Yeah,
go.
I need to copy and paste.
Look at that, right? So this can go straight into Excel file, nicely formatted. Pretty
Wow.
cool.
So is this something that's going to be available to individuals, or what does that look like? 'Cause that's a powerful tool to be backed by that data.
Yeah, no, it's I agree. I think it's super powerful. We're rolling it out. We're starting honestly with institutional folks, but I'm a big fan of doing this for a lot of firms, not just Google Finance, but Yahoo Finance. I think it's time for these platforms to actually provide some real insights besides just be a news gathering source.
Yeah, agreed. Well, it seems like you have a lot going on right now. If we take a step back at the business in general, I guess, what's been going really well for you? What's been frustrating, I guess, and what are you excited about when we look forward to the future?
I'm really excited about this AI agent opportunity and for the ability to democratize access to the truth and really improve the integrity of the capital markets. It was the original business, the title of my original business plan, improving the integrity of the capital markets and new constructs. And so I think this agent's a great way for us to scale what it is we're doing and have been doing. And so I'm excited about that. I'm really excited about matching our small language model expertise and our data expertise around unstructured data with Google Cloud's technology and their capabilities. That's super exciting. The ETF is also really exciting, and the indices are really exciting to see our data demonstrating real alpha live in the market. You don't get better validation than that. That's one of the things about the investing business. The bad part, super competitive, very difficult. The good part, it's very clear who's winning. It's almost as good as sports, right? Like we talked about in our first conversation. Like one of the benefits of sports is that it's a meritocracy. Who wins? The better team wins, right? There's a scoreboard. Sometimes you have some close games, some bad calls. Not always the case. Titans, but with the stock market, you can see who's winning and picking stocks better. It's nice to have that really ultimate arbiter validate, hey, this what New Constructs is doing is working. This ontology is superior. The data behind it is real. It's grounded directly in the filings. We think that's powerful. We're excited about that.
There's a clear goalpost to meet, which don't always exist. So I guess, is that something that you look at as a team? What are some of the important metrics for you? if we look back over the last year or so, some of the analysis we've done is actually generating alpha. Is that kind of one of your KPIs, or do you also look at adoption and how much of this is being used out in the real world, to your point, to establish, more integrity in the market?
A lot of our internal metrics are around how fast we can get the machines to go through the filings for us. So we're tracking the percentage of line items that the machine automatically collects. So we're constantly winnowing down like the amount that a human has to do to scale this. That's part of what we needed to have in place before we decided to go global. And that's something we've been working on for a long time. And really, rebuild the original machine that I built was really designed to collect the data at that level of detail enough time so that we could eventually trust the machines to take over, right? Because you only need to show a machine a couple thousand times. Hey, if I see cost of goods sold in this portion of a filing, in this portion of a table called the income statement, I can figure that out on its own, right? So it's kind of a repetition and building a library like that to train the machine. And so we track how effectively we've been doing that on the footnotes. Ultimately, we care a lot about delivering value for our clients. So the ETFs are great for that. And then we are always looking you're right, for adoption. And so some of our best partnerships in the past have been with firms like TD Ameritrade and Schwab, Interactive Brokers for big scale, Wells Fargo Advisors. And then we also are really proud to call some of the top quant funds in the world our clients. They don't allow me to say who they are out loud. They're all secretive. Like the top five, the big five, two of those have been clients of ours. And I think the other three will be soon as well, because again, the alpha and the data is there. And now people can do the strategy where all they do is front run what an ETF does, because these ETFs are passive. And so, or the indices are passive. And so as long as you know where, the methodology, you can anticipate the rebalancing and what the trading is going to be each quarter, and that's a strategy in of itself.
Well, once people realize they're at an informational disadvantage and their competitors have the advantage, then at some point they're going to rush quickly to catch up.
Exactly, and I do believe that at some point in time, this superior fundamental data becomes table stakes. Everyone's got to have it. Why not? I mean, do you want to try to convince your client that they're better off with you as their advisor if you don't have this better data? Like, oh yeah, I want to go work with somebody who's operating with insufficient, inadequate, and flawed data. Nobody wants to do that.
It's less information. No, agreed. And I guess to that point, and thinking optimistically here, if we look out 3 to 5 years, where do you see new constructs? Best case scenario.
Yeah, I'd like to see us as the global provider of fundamental data, analytics, and research for the world. Like that, we are part of everybody's investment decision-making process. And again, fundamentals don't need to be 100% of what people do, but I think we'd all agree it shouldn't be zero either. And if you're going to use it at all, use fundamental research at all, well, you should be sure that it's right. Because if you're going to use it, you don't want to use the wrong stuff, because the wrong stuff could give you wildly misguided ideas around what's going on with the business. So look, if you want to use fundamental research, you should use stuff that's proven to be superior. That's us. And we should be that provider. And so that we are now a part of, built into pretty much every investor's investment decision-making process, from the retail to the institutional, as the provider, almost like a public utility, except I don't really want the government to take us over.
I can definitely understand that. Well, David, this has been a great conversation. Where can people find more about you? What's happening, even with the Google agent rollout, more about new constructs? Where should they go?
Go to newconstructs.com. Go to the website right here. There it is, newconstructs.com. And you want to understand more about how our data is proven superior, here are the papers from the Journal of Financial Economics by Harvard Business School and MIT Sloan professors, the paper from Ernst & Young, another paper from Harvard Business School about our ratings being superior. But yeah, newconstructs.com. That's the place to go. You can get what you need there. You can find us on Twitter at New Constructs, LinkedIn on New Constructs. Just look it up. Fortunately, with a weird name like New Constructs, we don't have a lot of competing people.
You don't want to end up on some website you don't want to be at.
That's right. So yeah, no, it's we should be easy to find.
Great. Again, David, thanks for this conversation, and we'll leave the notes and the links at the bottom of the comments for everyone who's viewing and listening to find. Thank you.
Pleasure. Good to be with you.